This market is a masterclass in psychological warfare. Most altcoins are down, but Pippin is outperforming the rest. The question is this potentially the top, or does it make sense to still jump on this rally? Let's have a look at the on-chain data, the data most people are not considering. This is not the first video on Pippin on this channel. Most people slept on the asset, but this channel here published the first video 414 days ago. More follow-up videos were made. This is 402 days ago. Another video over here 84 days ago, another one over here 90 days ago, 18 days ago. And you can see how all of those videos, they tended to underperform the average video on this channel, right? The average video is this gray area over here. I continued to make videos on Pippin because something was different, and we'll discuss that something in a moment. Now here's the most recent video. It was published 18 days ago. Still somewhat of an underperformer. And so once the asset becomes popular enough, once more people look at Pippin, once the masses are buying in, that's potentially the top. Now let's have a look at how much more upside potential there might be. Again, the first time we talked about Pippin was more than a year ago. Here is the 1 year chart. We are now already at 80 cents per token. Pippin has become the largest of the Pump.Fun ecosystem tokens. Now Pump.Fun is the launchpad of meme coins on the Solana chain. Last year there used to be a lot of speculation around meme coins. Then the capital concentrated towards fewer and fewer wallets because it is a player versus player game, right? Most people tend to lose with meme coin trading. But a few meme coins survive, and what's interesting about this overview, that Pippin is more than 4 times larger than the second place Fartcoin. And that then begs the question, how much more upside potential is there? It's also the most liquid token on the Solana chain. There's 18.6 million worth of liquidity, and that's for the leading Radium liquidity pool. Now this is the overview of Pump.Fun ecosystem tokens. We can generalize this. This is all the meme coins on the Solana chain. And Pippin has now become the largest meme coin. It's even larger than the Trump meme coin. Everybody was talking about the Trump meme coin when it launched. At some point, it had a market cap above $8 billion. But over time, because of token dilution, because the insiders cash out over time, they get token unlocks, the market cap has gone down to 800 million. So it's below Pippin's market cap now. So let's have a look at the on-chain data. Here is the number of first-time traders versus recurring traders over the last month. It's relatively constant. There's no real growth. The number of token transactions also tends to rather fluctuate at a level between 100,000 and 200,000 per day. Here we've got the trading volume over time. It's measured in US dollars on the left, and it's normalized and segregated by different wallet cohorts on the right. So we see how trading volume tends to fluctuate. It now stays at a relatively elevated level. We also see that over time, the smaller wallets tend to take over more and more of the trading volume. So that's all the wallets that have less than $1,000 worth of Pippin. Here is something very interesting though. The price appreciated massively. But the number of wallets that have at least 1,000 Pippin tokens, so at the current price that's a bit under $1,000, that's trending down. The same is true for the number of medium-sized wallets with 10,000 tokens. The same is true for the number of whale wallets with 100,000 tokens. The small retail investor still sells. The whales, they have stopped their selling in the last 3 months. Still, the overall trend is quite clear, right? The number of holders on chain trends down, the price is going up. So what's really going on here? Have a look at the following. In the last 24 hours, we had 29 million worth of trading volume on Radium. Now, in the same time frame, we had 457 million worth of trading volume on the perpetual futures, on the bets on the price. On OKX, we had 344 million. So that's roughly 800 million worth of trading volume. If we add the next exchanges, we've got more than $1 billion worth of trading volume. And that compares to only a fraction of that. Maybe 5 or 6% of that trading volume on the spot market. So really, the price discovery here happens not on the spot market. It happens entirely on the perpetual futures market. The perpetual futures market is overruling what's happening on the spot market. The number of spot holders on the Solana chain is going down, but the demand through the perpetual futures is growing faster than that. That's why the price is going up. Check out the trading volume of Pippin on the perpetual futures over time. It is extremely high since November of last year. And that's what then, through arbitrage bots, also moves over to the spot market to a degree. The perpetual futures market was not the dominant driver in the first two rallies. That was indeed the on-chain market. But now things have flipped. The on-chain market is much less important compared to the perpetual futures, compared to the bets on the price. And that then leads to a player versus player game. So on the one hand, we've got the people that bet on the price. On the other hand, we've got the market makers that might manipulate the price in their favor. So let's say the retail investor is very bearish on the token. They are betting on falling prices. Then when the position gets opened, at the same time, the market maker might open the counter position. So we've got short on the one side on retail, we've got long on the other side on the market makers. When then the market makers have strong enough of a position, say on the long side, what then happens is that the market makers manipulate the price on the spot market. So we've got bets on the price and we've got manipulation of that price at the same time. The reason why Pippin goes from one high to the next and the reason why this happens so erratically in those quick moves is market manipulation. Because again, the market cap of Pippin is roughly 800 million. The amount of bets on Pippin now adds up to 300 million. That is massive. Let's say half of those 150 million is the short side, it's the retail investors, and the other 150 million is the market makers. How much money do the market makers have to pay in order to squeeze out those short positions? So let's say they wanted to push up the price by say 50%. How much money would they have to invest on radium on the spot market to push up Pippin to that degree? If you wanted to push up the Pippin price by more than 50%, all you had to do is buy $800,000 worth of the token. The price impact, the slippage, is 28%. So after this transaction, you will not receive $800,000 worth of Pippin, only $615,000 worth of Pippin, because you are moving the price, you are losing those 28%. But after the transaction has happened, the price of Pippin will have appreciated by double of that, so by 56%. So you're putting in $800,000, you're pushing up the price by more than 50%, and you are going to liquidate a good chunk of the 150 million worth of bets that are currently betting on falling prices. That's how short squeezes are made. When there is the potential to make tens of millions of dollars by only investing less than $1 million. That's when prices shoot up very quickly. That's when market manipulation occurs. Just have a look at this. There's 10 million liquidations of shorts over here. There is 5 million of liquidation over here. And again, those liquidations happen by just moving the price a few percent, not even by moving it 50%. With a sudden 50% price appreciation, we'd see much more liquidations. So that's what the market makers essentially are doing. They are offering bets on the price, but at the same time, they also impact the price. They say who is going to win the game. They allow you to take any kind of position, but they simply look at the net exposure of the retail investor and then do the exact opposite in order to make money, in order to then concentrate capital for future market making, of course. So that's how the game is played. That's how rather illiquid meme coins can suddenly spike above the value of the Trump meme coin. It is not organic demand. The number of wallets that own Pippin tend to go down. It's instead leverage that builds up in the system. Leverage through open interest, through the perpetual futures, a lot of bets on the price. The retail investor is getting wrecked. The market maker is making money by deploying just a few $100,000. What I find fascinating is just how bad the altcoins are doing. This is the performance in the last year. And just have a look at how poorly some of those altcoins did. Minus 84%, minus 95% even over here, many minus 80s as well. And the others dominance, the measure of how much of all of crypto is currently in the altcoins that are not in the top 10, that's going down since the beginning of 2022. The altcoins have underperformed on average by 62%. Now this is only measured in market cap. And there is a strong distinction to be made here because market cap developments are very different from price developments. Here is what I mean. This is how many new tokens get unlocked every single week, at least for the tokens that have been tracked on Tokenomics.ai. This tends to be close to 1 billion of additional potential sell pressure. So early investors, venture capitalists, they get tokens that they can unload. The team, they get tokens that they can then sell. There's always a party that gets those new tokens, and that might lead to additional supply, depressing the price. Really, the reason for this are people like this, Andreessen Horowitz, or like this, Sam Altman. On the topic of Sam Altman, right, the founder of OpenAI, he's also supporting a project called WorldCoin. This is the number of WorldCoin tokens over time. And of course, developers and investors get more and more tokens unlocked every single month. And so this is then what that means. Just have a look at the following two data points. So we've got the WorldCoin price close to $10 over here. It lost 95% of its value. It's currently at 40 cents. Have a look at the same data point in terms of market caps. That was at 1.4 billion and is now at 1.3 billion. So the market cap has barely changed. The market cap maybe went down by 25% or so. The price went down by 95%. That difference is token dilution. That difference is payouts by the Andreessen Horowitz and Sam Altmans of this world. That's why the picture looks the way it does. And so there are two potential ways to deal with this, right? We can just forget about the altcoins altogether because it's a rigged game, or we can try to take this market structure to our advantages. We can bet on falling prices of altcoins, and that's what I've been doing for the last 5 years. Here is my monthly outperformance over buying and holding Bitcoin over the last 5.5 years, roughly. The dotted line here, that's the 12-month moving average. So we are now close to an all-time high in terms of 12-month outperformance versus Bitcoin. And that's then my portfolio. That also includes dollar cost averaging. So that's a combination of saving money and outperformance. The outperformance over here is, by the way, 2.3% per month if we average out all of those data points. And so I started a copy trading pool last year as well. Bitcoin during the time period lost 25%. We made 17.3%. And so there's another copy trading pool this year, 2026. It's described over here, the relative valuation altcoin trading. It's running on a platform called Hyperliquid. 10% of the gains are profit share. There's a 5% deposit tax. And there's also other strategies that you can take advantage of. For example, here, the Ethereum trend following. Over here, the Bitcoin trend following. Here's our performance for Bitcoin trend following. It's currently got an APR of 55%. And here's our performance for the Ethereum moving average vault. It made 40% so far, and it's the best performing trading strategy on the entire platform. Ethereum trend following is on Gravity. So those are all our automated copy trading capital pools. This is all available to the premium members of this channel. Premium is available for $125 per month. You can simply just deposit on the first month, and if you don't like the content, if you don't like the additional videos, etc., you can actually unregister after 1 month and just keep your capital running. If you want to save some money, you can also sign up for the yearly membership. Then you get $250 for free, and then you can also include the relative valuation trading capital pool. So the capital pool where we bet on falling altcoins, that's only available to the annual members. The other two trend following strategies, they are available for all members, so also for monthly subscribers. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!